Today we're going to look at the pound Kiwi forex pair. The pound, aka the sterling, has fared better than many currencies last month as the world faced a bank crisis, not only in the US but Europe as well. You have an improvement in market sentiment in the UK that has benefited the pound as well, making the pound one of the better performing currencies of the year thus far. But many analysts think that it has further to run. Now, on the other end, got the Kiwi, the New Zealand dollar. It remains on the water relative to almost all G20 currencies year to date, following an underperformance due to number one, you have a slowing global economy. Number two, New Zealand is closely tied to the Australian economy. Thus, we've seen a fallen Aussie dollar, both of which can impact demand for the Kiwi exports. Kiwis in New Zealand's fairly known for their dairy and meat exports, but primarily the impact is coming from the Bank of New Zealand um, as a result of interest rate cycles being the primary driver of a weak Kiwi. So let's go to the charts. We're going to go to the monthly chart first, and you can see that for the better half of 5 years, Kiwi has been range bound on the monthly chart. However, we're talking 2,000 pip moves, right? So if you play the top and you play the bottom, that would make your years. Shorting at the top, 2.06, buying at the bottom, 1.85. Now, price is in the middle of this range right now. However, we've seen four green monthly candles, with the current candle being green so far. So, uh, this appears to be that the momentum is to the upside. Let's go down to the weekly chart. And on the weekly chart, you can see we've got a 13 crossing over the 26 simple moving average. You have bullish momentum to the upside, which is respecting an up trend line. However, price is coming into a selling level. Right, you got these two wicks here, implying selling pressure. There's something here. Now, it's not fresh because price hit that already, but there's something right here. I love to see wick over wicks because on a smaller time frame, that usually implies buyers or sellers. All right, let's go down to the daily chart and let's see if I see anything. Oh, beautiful. So we have this magnificent M pattern, which is a reversal pattern. This was beautiful, beautiful setup. And this was the trade setup right here. A break of the M formation, and a retest. Now here was the zone, right there. So if I had to, if I didn't know if and when price was going to come back to that level, here would have been my zone. Let's see how that panned out. So just so we have a drop in price. We have 3 basing candles, and then we have a drop in price after that on decent volume. All right, let's see how things panned out. Yeah, it's beautiful, beautiful entry. All right, but that's in the past. Momentum to the upside, uh, and here was the other. We just missed it. Just missed the zone. Just missed the zone. This was daily buyers at the 1.985. And because price penetrated the zone 50%, but it's near the upper range on the monthly chart, we're going to say that this is still daily sellers. We'll just say at the 2.03. Alright, let's go down to the 4-hour chart to see if there's an opportunity to get in. I don't see one at the moment. Let's go to the hourly chart. Alright, so maybe here's an opportunity to get in. Maybe if you have a pullback to the 1.99, you can take that to the daily sellers area. However, the bet opportunity is if price can get back into this area here and hold. Look for a reversal pattern on a smaller time frame to potentially take that higher. So let's fix this up a little bit. Yeah, pull back to the daily buyers, which is also supported by this up trend line, and we could see price continue to move higher. Again, fundamentally, pound, one of the best performing currencies year to date. New Zealand dollar, one of the worst performing currencies year to date. Thanks for watching. Subscribe. Please like the video.